Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. Happy February. And the agenda today, we'll be going through the regular market update, and then I'll go through the earnings trades. Those are kind of up in full swing now, and then Joe's going to be going through some charts for us. So let's get started. I didn't have a lot of charts and stuff I was seeing, but there was something funny, and see if anyone can solve this Wheel of Fortune for world's worst investor. Any ideas out there?
Jim Cramer?
Yeah, that's right. You got it. Yeah, I follow this thing. It's on Twitter. It's like inverse Kramer, so it's pretty funny. Anyway, I thought it was funny. Anyway, so let's get started here. Market update. So you can see, Russell SPX still in 5. You can see NDX is 5, but Q's still 7. So they are making transitions, from 7 to 5. We're seeing a lot of that movement, 7-5, and starting to get ones, which is definitely a bullish overall. Green pie wise, slight increase. I mean, 78 very elevated to 80, so still like really full on the green side there. But we'll go through that analysis here. So let's take a look at the this is state 1s and 8s. So you can see we're just getting pretty steady climb here on the 1s and a drop off in the 8s. You can see here, this is the new interface, but it has some good stats on the front page. So it's not letting me highlight. So you can see state 8s are at a 52-week low, and state 1s are once again at 52-week highs, so 1 year. So that's obviously coming off a very bearish year, but we'll just have to see how these transition. I did want to pull up the 7s and the 5s. So we always talk about getting those transitions, because you'll get like the spike here in 7s. So you can see it's like 32 on the 7s, 15 and then 7, in state 1 and 5. And then you're should get transitions, and we didn't get a ton here, and everything crossed over here. We got 7. Everything started elevated, which we thought was a little different. From the baselines here, we got like a lot lower numbers for the bullish states. So here they were a lot more elevated. Then we got a nice spike in 7s, and you can see the 5s. If I just pull that out, the 5s and the 1s are kind of increasing here. So we're getting transitions from 7 to 5 and 5 to 1, which is good overall. And obviously drops in the 8s here. So it's been a long time since the 8s have been this low. Quite a long time, as you can see as I pull back here. Probably let's see here. Now, yeah, probably back here, 2021, since the 8s have been this low. So obviously, we talked about this possibly being bullish, so it has shown pretty strong bullish. I think we're at near an inflection point here. We'll have to see what the Fed says, but a lot of things are flipping. You can see the pretty much the new lows are flatlining again. You can see that. I mean, they're in 10, 12, pretty much flatlining here. Basically since the beginning of the year. So we did get those, but we'd still get these little pop-ups, not like it's kind of like this right here, where we're getting these lows, but even lower. I mean, 8 here. I mean, that's very low. And we're starting to get little pops on the 1s, and we always talk about that. We need state 1s for these highs to be able to start popping. You know, they got to be in state one. So seeing a little bit of popping. So a little encouraging overall for the market. Obviously, everyone's pricing in, you know, one more rate hike, and we'll talk about that, you know, like soft landing type stuff. So, you know, these have continued to diverge. Highs above and below the 200-day SMA. So obviously a lot of bullish signs here in the charts, at least in the market pulse stuff here. You know, overall, I mean, we're still very elevated in the pie. You know, so if we go state percentage, I mean, we're up in the 80s. That's very elevated. You know, back here we got about the same, you know, 81. So very elevated. You know, we had a big downturn after that. So, you know, if they keep transitioning to 5, you know, 7 to 5 to 1, obviously that's going to be very bullish for the market. You know, but it's hard to, it's not really a definitive direction, but, you know, we are seeing some bullish signs. You know, some of the other bullish signs, obviously, you know, we got over the 4,000 level for SPX. So the next, you know, 2 levels, this 4,100 has been, you know, a problem for, you know, a little bit here, basically since back here, September. You know, that's 4,100 here, 41 here, 41. I mean, it's pretty much 41 right on the dot. So that's going to be your near term, and that, you know, Say Modeling does a terrific job just pulling out these, showing these numbers. So that target 3 is going to be very strong resistance. We'll just call it 4,100. So, you know, obviously getting above that would be, you know, very bullish, but, you know, pretty much did, you know, obviously this is state 5, so it's a shorter duration, but, you know, it's been an 8 of 13, you know, it's pretty much done, you know, kind of the average wave move. So it's just a matter of, you know, what's it going to do, break down or up from here. But really the key on this chart for state modeling is at 4,100. And then, you know, to the downside, that support, you know, if it does get down to that, back to that entry price, 39.72, you know, we'd need that to be strong support. Overall, you know, the range, I'll show that on the other chart, but state 5 here. So you can see from here, you know, I think we reviewed this like last week. It's about a coin toss, whether it's going bullish or bearish. You know, just kind of recent history on these, you know, the 5s have been the tops, you know, going back quite a while. We'll just go from, you know, you know, the whole last year. You know, the 5s were the top, so it's pretty much next day, you know, a little higher than down. This one, you know, had a plunge and then it popped up, turned over. So this one, you know, we've had to walk up some here. But, you know, SPX getting out of 5 and a 1 would be extremely bullish for the market. So we do see that very, very bullish overall for the market if it gets into 1. So we'll keep our eyes on that. I'll show you that 4,100, just kind of draw a line on that. So this one here, that's the 41. So that's kind of near term. You know, bigger picture wise, 42 is, you know, the top of that range, and then 38 is the bottom of the range here. So, you know, we had like testing here, we had a false breakout, and then hasn't really got back to that since. You know, other kind of things that I think are important, obviously, you know, Dan brought this up last week. You know, it looks like we're getting like a golden cross. So that's the 50 crossing above the 200. So this is the 50 down here. So going above that, you know, obviously if it crosses above and holds, you know, that's obviously going to be, you know, bullish overall. You know, everything popped above, you know, those moving averages there. You know, the other thing we talked about bigger picture was that downtrend line. And I showed you from, Twitter last week, everyone was talking about it. So, so that got broke, easily there, past couple of days. So we're well above that. It's pretty much, right on near that 200-day MA. So, that's a bullish sign. So lots of little, kind of bullish signs overall. Now, these resistance levels, we've been range bound in this 42 to 38 pretty much, with one little false breakout since May, of 2022. So, with a few drops below and above, but that's kind of like the range it kind of been reverting to. So near term, 4,100, getting above that, and if it can pop into one, very bullish. Obviously, if that fails, then we'd be looking at 3,800 to hold, which it did a great job back here, holding at 3,800. Sustain the range. But the fives have been the top, so it's kind of like everything. It's been for the last year or so. It's just kind of a lot of conflicting signals. Not like a clear direction overall. But I think if we get the one, obviously that's going to be very bullish. So let's look at Russell. Russell's done well. The 1900 broke, so we had the high here and then ended up below. Oh, it closed right above it. Next day we're down below. So that's kind of a bullish flag here. So we're close here at 1910. And then this pretty much is showing support here, and then here it kind of launched. So this is starting to flip over from resistance to support. So along with SPX getting in state one, getting over 4,100. Same thing with this, staying above that 1900. It's going to be critical, and if it can stay above this 1921, we could also talk about getting this transitioned into state one. So these things going into state one, obviously a very bullish thing overall for the market. So what's at 19? We're right above the range. So if it does hold 19, that range, I'll show it on the next chart here in a second, but same type of characteristics. Only 30% going to state one, but bullish overall is like it's almost coin toss type thing. So let's look at this one. So this is that 21 would be the newer range. As long as we hold that. So this one has had false breakouts. That's at 21. Here's 19 right here, obviously been key. So it did have false breakout here. The 17 held real strong. Just minor breaks on it, but not for long. So we did have that false breakout here. So obviously above 1900 here, we just got to, this would have been like a very bullish sign here, comes back down, to support, pops off, and then, jukes you out. So this would have been a very, bullish sign, like, okay, comes down to support, and then rallies off of that. But, it's just that total head fake. So that's why we got to watch multiple signals, multiple indices, multiple indicators, so we can try and figure this out. So overall, Russell, as long as we stay above 19, and if we can get a transition to one, super bullish overall. So I think they're down a little today, but nothing significant. So it's still well above 1900. Quickly 10-year, it's just kind of been flopping. That 3.5 kind of range, it seems like it's down below and it'll come back to that 3.5. That's just kind of like, I don't know, the big support line here, 3.5. So, hadn't moved much, relatively, since I guess the beginning of the year is a little higher, but the past couple of weeks really hadn't moved much, just kind of chopping back and forth, waiting for direction overall. Let's look at obviously, the big meeting with the Powell today. So pretty much locked in for a quarter, 99.3. So pretty much guaranteed. We walked out last week, all the future months and kind of the expectations. So those have, I don't think those changed much overall. I think this has gotten a little bigger, the hold next meeting, but still 80-something%. So pretty much right now the market's pricing in quarter today, then quarter next meeting, and then that's it. And possibly cuts later in the year. So that's what, the base case for the market is. I don't, we'll have to see if Powell comes out with this hawkish talk again. He's been doing that quite a few times when the market seems to get ahead of itself. He'll come and, rain on the parade. So, yeah, nothing there. I don't know why I opened that. Balance sheet, just kind of slowly walking down. Last week about 20 billion. So, I said we got a long way to go. The 75, which would be the same correction where we ran into liquidity issues overall. So, just have a look at this in a little while, but yield curve still highly inverted. 3.5 here on the 10-year. 2, so we're about 0.7 or 70 basis points. So, these are very attractive short-term returns. People haven't seen this in a very long time. I'm not sure how these short rates aren't translating to, a lot of the savings and checking accounts. I don't know why those aren't yielding better, but probably just greedy banks, but they should be. So anyway, I think that was it overall. I'll open up to questions, comments on the market.
Powell is going to kill the rally.
What's that?
Go ahead, Senator.
I said Powell is going to kill the rally today. That's my prediction.
Yeah. That guy, Michael Burry, said, put out a tweet within, a short time period, he said sell. So he agrees with you. Yeah, I'm not sold.
So Josh,
I think, if we can hold that 19 on Russell, if we can break 41 on SPX, if we get a transition, then I'll be sold. I'm not sold. So, starting to lean more bullish. The signs are like accumulating, but this could be, I think, by close of business tomorrow, we should have a pretty decent idea of whether, we're full bullish or we're back, what we were. Good.
Josh, a question for you and just a comment too. By the way, the market maker move on the SPX for the day is 50 points. 48 or 49 really, or it could go. I'm betting between now and 2 o'clock it hits 50 points. Anyway, is it possible for you to superimpose like the 250 moving average for the 3 major averages in the same graph? Can you do that?
Say that again. Slow down.
Can you superimpose? I don't want to see the candlestick, but I want to see like the smoothed out moving average, say for 250-day for the SPX and Qs RUT. Just a one over the other. So I wanted to see how the three indices, the moving averages, how they looked on top of each other. That's all.
No, I don't think we have that.
Now, I'm not sure anybody does. I just wanted to, I didn't know how to do it. I just was asking. Okay. Well, then, I'll
Yeah.
have to look in.
Yeah,
Right.
I know we have compare symbols, but I don't think they have, we don't have the, it's just price. It's not.
Right. I think on Thinkorswim, it's almost the same way. I think you can put two and you see one simple moving average, but not two of them together. So, okay. Maybe I'll try to take screens, see if I can do that. I think that would be an interesting thing. Just a question to the group is anybody fading the Fed move today or fading the conference call? I'm just curious. No, silence.
Sound like Sudhir is, but.
Sudhir, are you did you fade the Fed move today? Sometimes I find comfort in other people.
I don't know what you mean by fading the move specifically.
Fading the move, well, like playing it to the downside with a bull put or selling a call spread, something like that.
No,
Well,
nothing
for
based just on this move. But I do sell bear call spreads when I see I think this rally will top out, and what I'm looking for is 2 days of a declining green pie, and then I'll sell bear call spreads on the major indexes like on SPY or QQQ.
Yeah.
Yeah, I've been fading with selling call spreads as opposed to buying debit put spreads when I'm bearish here. So it's worked out a couple times. We'll see. We are fighting the confluence of the market really wanting to go higher now, but I think the ADP report came out this morning and it was still pretty hot. So tomorrow's the jobs report. I expect it to be a little bit hot too. Anyway.
Yeah, the jobs report is Friday.
Yeah.
Oh, I'm sorry. I said tomorrow. I meant Friday. You're right. You're correct. Absolutely. So it's a big day. Is anybody fading Apple because they report tomorrow night, and that's another like a major mover that's been having issues with supply chains and high prices and stuff like that. So just curious on either one of those. Or it's kind of we are right at the resistance points. So either we're going to break and continue to break through, or we're going to have a pullback after today, I'm guessing. Apple reports, I think the market goes away Apple. So if Apple's, even no matter what Powell says, if he's a little hawkish today, if Apple's good tomorrow, I think that'll be a thing. And so, we'll see. This my bellwether is there. I'm just
Yeah, obviously Apple's a bellwether. So yeah, interesting.
Dave,
Go, Jim.
I would fade the market here. I think we've gone too far too fast. I don't know whether Powell be the impetus, Apple, who knows? But I think we're certainly due for a pullback, and then really the length of time and the depth of that pullback to me is probably going to define the next 3 to 6 months in the market. If we just get a real shallow couple-day pullback and then make new short-term highs, I think it might be a hell of a year.
I think he's going to have to be bearish or hawkish on his tone, especially if he reduces 25%, because otherwise, if he doesn't do that, then people say, well, it went to 75 to 50 to 25, it'll go to 0 here soon. And the races, I think he was to curb that in. So I think he's going to try to rein in the exuberance.
Yeah, well, I agree with that, Dave. Like if, I laid out the expectations. So people are thinking, a quarter done, and, the Fed they already said there's going to be no rate cuts, but, people are pricing them in already. So that's kind of where the market is, very, so any kind of, um, you know, language where people actually believe it, from the Fed is going to be bearish for the market because they're priced so bullish right now, with like the
For
cuts.
the guys, yeah, the bond guys are different than the equity guys for sure here. So
Yeah,
we'll see who's more right, I guess.
yeah, well, see how the economy does too. There's been like lots of headlines on, layoffs and things like that. Inflation has been coming down. It's still elevated. So, I mean, we're still, 5% on last year's 10%. So prices are not really coming down. That's, relative to where they were at the beginning of this transitory inflation period. That was pretty funny when they said that. Okay.
Josh,
Yeah.
Dan here.
Yeah, Dan.
I'm looking at it maybe a different way, but I think if Powell came in with a dovish stance, not that I think he will, but let's say he did, just for argument's sake, I think that would throw a monkey wrench in the market as well, because inflation hasn't come down anywhere near the 2% target that he's looking for. And if they see him, doing dovish or even talking about, doing a pivot, I think people would take that as he must see something on the horizon where the
economy
is really in trouble.
Yeah, true.
I saw a chart somewhere was after the Fed pivots in history.
Oh yeah, yeah.
That's usually when the big crashes occurred.
I'm the one that showed you that.
Okay.
Somewhere in here.
And the VIX has been down below 20 for a number of days now. So that's a new thing too.
Yeah. There's the Fed pivot thing I showed you before.
Yeah.
Yeah. No, that's usually, something was broken, they broke something. So then they pivot and the damage is already done. It takes a while to play out, right? So as far as we know, nothing's been broken yet. I talked liquidity being, one of the major issues I'm concerned about, that and more. So
I think they're going to go until they break something.
well, that's what they normally do.
Yeah.
Yeah. Outside of this like COVID thing, that was a little different, but the other ones, I mean, they're raising rates. Going into the Great Recession,
You got to look at it from Powell's standpoint. He and others in the Fed made the statement that inflation was transitory, as you pointed out just earlier in the conversation. And look at how much heat he took for that, right, in the press. So he's not going to pivot until he is sure inflation is solved.
Yeah.
You just look at it from a 3-year-old emotional standpoint, right? He took so much heat for saying that inflation is transitory. This time he's going to dig in his heels. I don't think he pivots until he's sure inflation is where they want it to be.
Mm-hmm. Yeah. Well, I mean, I called that like as soon as they said it. I'm like, transitory in my butt. Anyways, these charts, I mean, you can see a lot of them are looking fairly similar. Like things turn down, they pivot, gets a little bounce and then turns over. I mean, all of these pivots are after, for the most part, things dropping, from the highs for the most part. This one, obviously, I'd kind of throw that one out. Anyway, the COVID, a little different than the rest. But yeah.
Even
I
even
don't
if
think
he
Mhm.
even if Powell makes his gets down to 2%, his target, that doesn't mean prices are going to go down. It's
No, that just means
prices are here to stay. I think it's like
yeah. I mean, that just means they're going up, like how they normally were. Not like the eggs weren't jumping, double the price in a year. That's in your face, like
Yeah.
if it's, it, normally they just do a like slow creep so you don't notice it, Um, they'll like shrink the bag a little or, it goes up like 10 cents. You're like, oh, it's no big deal, right? But, just a cumulative effect over time. But, this one was different just because, I mean, you just got slammed. Everyone saw, it wasn't hidden. It wasn't like sleight of hand price, increases. This was like, okay, I bought bacon last week, a pound of bacon for $4. Now it's $9. Like, what the hell, right?
Yeah, that's the, everybody's savings, lifetime savings is, taking a big hit, not just from, inflation, but just from the stable inflated prices that are never going to go away. So you better
Yeah.
do really well in the stock market.
Yeah, well, I don't understand how the savings rates aren't a lot higher. Yeah, I mean, you can get like CDs and stuff, but like the money market, like why aren't I mean, I remember when checking accounts used to pay decent, amounts. And savings definitely paid a lot more, but I mean, they're still paying nothing for the most part. I guess you can find certain ones, but like the big banks are still paying nothing.
Yeah, it's not like the eighties. We had 16%, 17%.
Yeah.
Josh,
Imagine locking in like the 30-year, treasury bill for 30 years at like 20 something percent. That would have been, oh my God, that's like the best investment ever. Yeah.
Josh,
Mhm.
this is Winslow.
Hey,
Hey,
Winslow.
the Fed has allowed, or maybe it was Congress, the banks to get interest on excess reserves. And that's like, I don't know, they're getting like 3% or 3.5% or something
Mhm.
from having excess reserves. So they don't really give a shit about their customers like
Right.
us. So
Right.
that's the problem.
I agree with that. Yeah, and it's a fractional reserve banking system anyway. So, what do they have, like 3% of deposits on hand anyway? Now,
Right.
now if they have 5%, they're just taking that, excess two and, earning 3% on it and paying us, 0.1,
Right.
thing we got there. Yeah, so big fan of the banks, right? Oh, good point. Yep. Okay. Good conversation. Anyone else for kind of run through earnings real quick? No. All right, let's fire it off. It's a new UI. Very happy things moving along. We'll show you. We're making, let's give you a quick peek. Joe, when is this going to be done?
Was that yesterday?
Oh, yeah, yesterday. No, realistically.
Yeah, we're hopeful by middle to end of March, right? And we'll roll it out
Yep.
to the group beforehand.
Yeah, that's the plan right now. Yeah, and we're trying to move stuff to the cloud, some of it, so we don't get this spinny wheel for customers. And you guys tolerate it and we appreciate it, but we realize we have to get rid of that. But yeah, we're making changes to a lot of things, layouts, we're moving to only one stop loss, just to make it cleaner. And it's a lot of little changes we think you'll like, and looking forward to getting your feedback. And once we push this out to you guys, you'll be the
Hey, Josh,
the beta test. Yep.
Josh Lee. Now,
Thanks.
one stop loss, how does that relate to where we currently have the stop loss 1, 2, and 3? Is
Yeah.
there a, okay,
Yeah, so I don't know, like overall, I mean, is there, for most of the charts, 1, 2, and 3 aren't very far apart. So it's just maybe some of the wild, symbols will have pretty big differences in the stop losses, but most people, when you say stop loss, they don't say, well, level 1 stop loss or a level, it's just a stop loss. So, we're kind of deciding whether, we're going to do like the second or third, like nothing with the algorithm's going to change. We're just, the display is going to change, so, we're still deciding on, how we want to, which one we want to pick, like 2 or 3.
Okay.
For the stop loss, but it's just make it a lot cleaner and, a lot less explaining to do, like why are there 3 stop losses? I don't know,
Mhm.
normally people just have a stop loss, right?
Okay, okay, thanks.
Yep. Okay, bullish pre-runners. We got 5 open, I think a couple yesterday. Is anyone out there trading these? They've been doing pretty good.
I'm trading them all.
All right,
I'm trading
Uh,
all the earnings this round.
yeah. Well, I'll expect my my 5% cut at the end here. So all right. Obviously, we got 5 open. We got 1 showing a loss right now. Today may be different after today, but overall, we look at the closed positions. We got 10 closed already. You can see all here. This is the. I'll just highlight it. This is the profit target we're looking for, that 25. So you can see anything over 25. So this is end of day. Obviously, it crossed 25 sometime during the day. So if you're live trading, you'll get less than what it ended up at the end of the day. But that's the best we have right now. But so far, 10 closed, 5 open, looking pretty good. On the other side of that, some of these could have hit 25, during intraday, and you could be closed out, whereas, end of the day at 17. So it kind of works both ways that, but overall, looking pretty strong for bullish pre-runners. Let's look at the bullish runners. So we got 2 closed here, 5 open. We're up some money right now overall. We got 2 down overall, just that are open. Obviously, these can all change, but we had 2 close out, above the 25 so far, and 5 open. So, they all started pretty well. Obviously, the bullish pre-runners are doing strong. So let's look at, let's see. This is volatility rise. Sudhir, do you trade these?
Yeah, I do.
Yeah. Not sure about these. Sometimes they're like, they're some are pretty short. Like this one, see, Greg, I've been watching, on a daily basis. It moves quite a bit, but it just, like as soon as we got in, it like dropped. Obviously not like a big drop. I mean, it's like $40, but it's seeing pretty big moves overall, like for its price range. Maybe it's just too low price, but I'm not sure about it. I think Disney did really well last time, so we'll have to keep our eye. That just populated, today or yesterday's trade. So, but those are down a little between the 2 of them. Let's see. Couple of, we had that vol crush. That one closed. I closed that out. That's the only trade so far in there that fast. The non-movers. So we got 2 that closed out. We got 3 active. I look for like 20%, unless it's like the next day and it's at like 17, then I'll just like close it. But otherwise I look for like 20. So Sudhir, this is the one I was talking about, like General Dynamics. So we, basically, this is, like the earnings day, we had to drop. And then, we had expiration on this of 2/3. So we had until Friday to close this thing out, right? So it moved against us the first day, and it was right on that. So that's our low end there, that 225. So we closed right above that. It pretty much held the whole time. And then we had a nice day yesterday, and it came up for like a nice strong profit that, hit over that 20. So I closed it out at that point. So like, that's why we had that extra week on those non-movers. The vol crusher is supposed to close like the next day, but if it moves against you, obviously you're not gonna, if you're near max loss or something, you're not gonna, close it out. You hope, pray for the comeback. But if it's a good profit the first day, at any point during that first day, I mean, obviously close it out. If it moves against you, that's why we put in that extra week for that, exactly like that comeback. So these ones are doing pretty well. This was last night. I didn't even look it up. I didn't look it up yet. See how, whoa, that's a big move. So this one's going to be opposite. We're gonna, what is that? It's right at the top. So obviously, you're just gonna hold it. You got till the 17th for this thing that, possibly come back. I mean, that's a big move for Striker. That thing normally never pops like that. So they must be selling a lot of, synthetic knee joints or something. I don't know. All right. Otherwise doing pretty well overall. This one's up pretty decently. So nothing bad so far, knock on wood. But I haven't seen any bearish trades come yet. So that's it on earnings. Any questions on that? Is anyone else trading these besides Sadir?
I do trade them, but I trade them a little bit differently than the prescribed.
Yeah, that's, I mean, these are our ideas. I mean, you obviously can tailor them how you want. It's not like, oh, this is the only Delphian, this is the Delphian idea. You guys implement it how you want, obviously. And if you have better,
as well.
if you have better ideas, Dave, we're always open.
Yeah, I was going to talk to Joe last week about a strategy that's kind of like specifically, it's like a broken wing butterfly with a little bit of the other side, the other type of option kicker to it. It's a like this thing. But anyway, I failed because I had some home refrigeration issues to deal with for a whole week. That's just been horrific. So that's like put me back. But I'll try and get to Joe on Friday here, and we can cover that. So it's just a slight derivation from the, let's say, the vol crush, if you will,
Right.
Condors versus iron condor kind of thing. Anyway, it's like, I don't want to go into it now, but I'll try to demonstrate it to Joe and see if it's worth bringing up to the group.
Okay. Okay. Is there someone else? I thought I heard someone else pop in. No?
Yeah, this is Mark. Yeah, I trade them as well. And I also, like Dave, I kind of do my own little iteration on it. But
Yeah. Well, we had to, I mean, as we go public, we have to keep this as, simplified. So, it's the base idea, and you guys obviously, I don't think we're going to put broken wing butterfly as the default trade for people. They'll just be like, what is that? Like some newcomer. So, that's good. What's that? Dave, your phone's
Oh,
breaking up.
I'm sorry, I thought I was talking over you. I apologize. You're doing exactly what you should be doing with the ideas, and we're just kind of like tweaking them with our own little
Yeah.
biases a little bit, and that's the way it should work, in my
Right.
opinion.
Yeah, me too. Perfect. Okay. All right. Well, thank you guys. Joe, sorry, I'm
Okay,
running.
Josh.
I'll
No,
hand
all
it
good.
off here.
I will grab the screen real quick.
Yep.
I know we got Al coming up, so we'll get out of here, but just a couple things. Start with earnings, and I've referenced this before. Here's Yardini versus the street. So, we were $208 in S&P earnings in 21. We are, 215, 220 in 22. Obviously, we're in the fourth quarter. Last thing I saw as of last Friday was that 143 of 500 companies have reported 68% of them were above estimates, which seems to be, we talk about that 65, 70% range above expected. So kind of in line. But then, in terms of the market this year, what are we talking about? So last year, or 2022, it's basically going to be 215, 220 in earnings, somewhere like that. We've been talking about this. Some people are talking 170, 180, 190 in earnings for the S&P 523. And Yardini says, 2.25, and he's got, the consensus street estimate at this 226. So higher than this year. So time will tell. And then in terms of the market short term, I pulled this out and said, dear, going back to your idea of the pie. Okay. So I analyzed the database. This is every year from 27 to current. Number of trading days, the green pie, bullish states have been in excess of 80%. You can see each year there. I won't go through them, but this is meant to maybe be thought-provoking and what to anticipate, what it means about the market. On average, 6.5% of the trading days have been north of 80%. On average, it's 17 days per year. One thing I just didn't get to it, but I want to analyze on top of the whole green pie, what percentage of the 80+% were state ones. And I think that will speak, I'm damn sure in 09, maybe in 12, certainly in 20 and 21, that state one percentage was quite high. Again, speaking towards underlying strength of the market. In 2022, as you see, just 4 days above 80%. Any guess what part of the year that may have been? Anybody? It was 4 consecutive days. Obviously, it was a difficult year for the market. Any guesses?
November.
I'm gonna guess after Jackson Hole.
After Jackson Hole would have been late September, right?
Late August.
Yeah, late August. So late August was exactly the time. The market, basically that first pull down, Russell bottomed in May. We had a test in June, and then basically we had that 2-month rally, June to August 16th. And it was right at that period in August, in that bear market year, where we got to north of 80%, 4 days in a row, and then bang, damn near a 20% correction coming out of that green pie at 80%. But that was in a bearish year, that 20% correction. I haven't, done every year yet, but going back to, 20 and 21, the corrections out of that 80% were minimal. Really, again, maybe speaking to just the underlying strength of the market. So, I just wanted to throw these numbers out there. Work
It's
to be
interesting,
done
you
on it.
know, your highest day there recently is 2020, when we had massive Fed stimulus. And then you go back to 2009, 2010, right after the great financial crisis, we also had massive Fed stimulus. So that's a very, very interesting chart. Be looking forward to other data like that, because I've always felt like at 80%, we're kind of overbought.
I agree with you. And, again, that's why I think too far, too fast. And the pullback is going to define, because, I kind of talked the same thing maybe a month ago. The depth of the pullback is going to speak to the strength or lack thereof of the market. We got a couple days and boom, off we went. But the pie was certainly not at 80%. So, but I'm in total agreement with you, Sudhir. I think that you could almost talk about those Fed years as outliers, 09, 20, and 21. And so that if you take those numbers out of the equation, it certainly isn't 17 trading days out of the year that we're north of 80%. It's far less than that. So, again, just wanted to throw it out there. Well, backing up a little bit, the pullbacks in 21, and so in 21, I think it was basically it was the beginning of 21 where we had those 25 days north of 80%. And we got two quick pullbacks, one in January, one in February. One was 4.5%, one was 6%. And again, I think that just spoke to the underlying strength of the market. And, for the rest of the year, basically the market went up. It was very similar in 2020. We got pullbacks off of the 80%, but they were hiccups more than meaningful corrections, speaking to the underlying strength of the market. So anyway, just wanted to, get it out there. Hopefully it provokes some thought, and I'll get into it a little bit more. Just the one thing I want to do, as I said, I want to analyze those state ones, and they may speak to confirmation of how strong the overall markets were in those particular years, and hopefully it can be a guide going forward. So
yeah, it's very interesting. If you think about it, I've forgotten how many symbols Delphian has now. I think it's around 4,000. Some are ETFs, of course, but certainly you have all the top companies in there. And in a year where you're not getting massive Fed stimulus in a normal economy, 80% of companies cannot be doing great. I mean, in any industry, you have winners and losers, right? Some are taking market share, doing better than others. For just recently, AMD announced and they're doing great. Intel announced they're doing lousy, right? And they're losing share to AMD. And there's only two people in the microprocessor market, in the PC market. So, when you get to 80%, there's just no way 80% of companies can really be gaining share and growing and all that kind of, in a normal economy, you have winners and losers.
agreed.
I don't think that. I agree with you, Sudhir. Yeah, it doesn't seem rational.
So when you get to 80%, it just seems like that's overbought to me.
So I got a question for Joe. So Joe, on the so many 60 or 70% beats EPS or revenues and whatever the guidance was, that's the guidance of the companies or the guidance of the analysts, and analysts are lowering their estimates. So if we're beating a lower estimate, it's like, that's a good question. Is it how well are they doing? But a question for you, do you know how many of the S&Ps are keeping guidance, raising guidance, or lowering guidance? That's kind of like that's what I look at a little bit. I try to, and I can only do it for a conference call. I don't know where to go find cumulative data.
Yeah, I don't, Dave. It's a good question. What percentage of the 500 are offering guidance? I don't know.
Yeah, I just noticed that like on Microsoft, I was watching, I have several that even if I don't trade them, I listen to the conference calls every single quarter. Home with me is kind of feedback from company and then kind of my bellwethers to do that. Microsoft, if you noticed, it was 4 or 5% up is when they released the numbers. And when the conference call came in and they they lowered guidance, it dropped that night to like 2 or 3% below. So it was like almost a 7 or 8 point swing because they reduced guidance. That was the telltale thing there. And then the next few days, it kind of rebounded and kind of went back up. And now we'll see what happens with Powell. But the guidance thing really does, I think, have a bigger impact on the earnings day trades almost than other things. I'll keep looking for. I think I asked that question to Trade one time. I think they said check the fact set, or I think there's a company that fact set. You might have to have a subscription to ESIC. But guidance is like that's what I would like to know is how many are beating or raising or lowering guidance or just keeping it the same or withdrawing it altogether. And that's what happened. By the way, that's what happened in 2021. There was you were talking, Joe, about everybody. So many companies were at the highs and not does that seem right? Well, there wasn't any guidance being given. They all pulled guidance back then, and so what did the analysts do about their projections and their price targets? They kind of like just, I don't know, they kind of followed a momentum rule rather than, basing anything about guidance and free cash flow in the future because nobody was given forward guidance. And that all changed.
And
in 2020. Go ahead.
No, I was just gonna say, and the earnings kept coming and the market kept roaring without guidance.
Yeah,
in many cases.
It was just a momentum continuation based upon when nobody was, and that was time when there were a lot of people not working. There were like stay home and try not to work kind of time period too. So it was kind of a weirdness. And I think that's why especially a lot of the software companies, that's where a lot of the money went in 2021. The software people that didn't have to go to work and could still put out product or sell stuff. It was all the software companies because they had high P's. We had low, big money, a lot of money in the system. And then now just recently, all those companies are the ones that got hit in the last couple of quarters because they weren't showing any revenue or increases or earnings increases, and their multiples got taken down. That was the bad thing about last year was all the multiples came down in 2022 that went up in 2021 for no reason. So now they came back down in 2022. So maybe hopefully we're at where we should be, I hope. Anyway, sorry for.
No, that's all good, but no, Josh, back to you. So we got Jay Powell time.
Yeah, okay. I was gonna show, I think we need to overlay this.
Hold on, I gave it up.
Yeah, I think we need to overlay that 80% on this Fed asset chart here.
There you go.
Yeah, like there's liftoff. Yeah, there's like real ridiculous liftoff there. So yeah, that'd be interesting. Yeah, because there was one in 19. I'm sure it's like right here. Yeah, that'd be interesting to see. Like
in
when
19, it was February 5th through March 4th.
Really?
In 2019, February 5th through March 4th.
Huh.
We topped out at 83%.
That's weird.
And by the way, the high is like 85% through all those years.
Oh yeah.
Yeah, 85 is the max, and generally it's somewhere in the 80 to 85% range. But in 2019 it was February, early March.
I would have thought it would be after after that pivot, but
Yep.
Anyway, yeah, it'd be interesting to kind of match those periods up here. Maybe we can get this on the Delphian system. That anyway, okay,
That would be
All right.
cool.
yeah, I'm sure it's pretty easy. Anyway, yeah, I think we're running over. All right, any other questions, comments before we close up here? All right, well, thank you all. Great discussion and comments and questions. So keep it coming. We'll do it next week. And thank you all.
Thank you. Good meeting.
Everybody, thank you.
Thanks.
Have a good week.
Yeah, thanks, everybody. Good luck.
Yep, you too.